How's it going, everyone? Welcome to the 2-3 weekly trading review. Just as a footnote for future trading reviews, I may get these out on Monday. On the weekends, sometimes I don't have access to my recording setup, so even though I'm able to do my analysis, I'm not able to have my second monitor, I'm not have my mic, and I can't get it out at the right quality that I want to get it out. So these may come on Mondays in the future, but I will try to do either the weekend at first, and then if not, then the Monday of the following week. So let's get into the trades this week. I took 16 trades, 14 day trades, 1 overnight swing, and 1 non-directional trade, which was an earnings time spread. So let's get into what happened this week to set up the context. On a D1 basis, you can see we're in this range. I'm going to hide some of these drawings. Just set the table here. We're in this horizontal range. Ever since this December 18th bar, the price action has been super patchy, difficult to trade. A lot of sharp turns, sharp pivots. You're in, you're out. You enter well, exit on strength, and then reload and flip sides very, very quickly. So day trading is favored, and I'm looking for overnight swings near the top of certain ranges and taking shorts on confirmation of market weakness. So over here, overnight short, overnight short, overnight short. Now, we didn't get the follow through on Monday, but I'm not going to talk about that just yet. I'm going to talk about that when I get into the swings that I took on Friday. But that's the context that we set up right now. So let's zoom into the M30 chart and see what's going on. So here's the drop, and then after the drop, we had this long bullish candle early in the session, and then we had a grind up higher over time. You can see that the volume was very, very low. Mixed candles, we had retracements, we had bid checks over here. So your best move was to wait for a contra move, find stocks with relative strength, and then go long. Or you could do the same thing on the short side, wait for the market to go up, find stocks with relative weakness, and then short over here. There were good picks on both sides. I think there are a few better longs than shorts from what I remember. But we're just riding this trend up, and we're waiting for any signs of weakness. So on Feb 6th, we got a gap up and a weak bid check. And as soon as this held, we knew that we had a chance to maybe test the upside. Ended up being a dead day with a news flush and kind of ended before the earnings report. We also had Google earnings that came out on the 4th and Amazon earnings that came out on the 6th. On the 7th, we actually got some volume that went down, but it was a very newsy and choppy move down. Let's zoom into that M5 chart. So first bar over here, the 10 o'clock bar. I'm actually forgetting what news this was. Yeah, this might have been some tariff news. All right, was checking my notes, and I couldn't find the exact news recording because it wasn't the unemployment report since that came out earlier. And I don't think it was ISM services either. So anyways, the main point here is even if you didn't know the news, is the price action following the news. Long red candle, whole bunch of chop, another long red candle, whole bunch of chop, and we just had a meat grinder for the rest of the day. There's a nice little opportunity to get short over here at 140 and ride that move down lower. So that was a price action we had this week. Let's first start with the earnings time spread that I took, which was on WDC. Or sorry, not WDC, my bad. That was the old earnings time spread. It was on Microchip. So I took the 53 calls for a 45-cent debit on the 6th, and I took it towards the end of the day. Now here's the setup on Microchip. Exceeded earnings 6.67% of the time, had an IV crush of 0.78, option liquidity of 0, expected move of 8.6%, average move of 3.7%. So very, very nice setup. This was also taken on Thursday, which meant that on Friday I have the highest opportunity to get profits, at least 50% profits if the trade works out really well, potentially even more. So I took it at 45 cents and I had an order out for just under 50% gain. I had an order out for 65 cents. Now microchip came out at 53 and I immediately got filled on the open for a 44% win. And this actually moved up even as high as 75 to 80 cents. So potentially had a move to anywhere like a 75% gain to almost 100% gain on that. Now it's hard to perfectly time the move. I'm happy to take profits right as the spread opened. It could have also opened and shot lower. Let's look at that M5 chart. Now with the earnings time spreads, by the way, if you hit that point closer to the front spread expiration, you're going to do a lot better. So it opened right here and it shot up immediately. So I think I had a chance to maybe push for a 50% gain on this, but happy with the gains I took. That was a nice win on microchip. That was the only improvement I could see. Push for 50%, be a little aggressive on Friday, especially knowing that on the open or after hours, it didn't do much, and pre-market, it also didn't do too much. Okay, now we're going to go through the day trades and the overnights. I want to do them at the same time because I only had one overnight, and it kind of depended on the day trade context. So, first trade I took for the week. Okay, I did a SPY day trade short, one share at 591. So I like this price action going into the gap. We had some nice steady candles on strong volume, and I didn't want to chase right here. I wanted to wait for an 8 EMA pullback. So I had my order out maybe somewhere here if I could get filled. It compresses a little bit. I knew I didn't quite have to chase this move, but I like what I saw here. Then boom, Trump announces, or he meets with the Mexican president, and they have a tariff delay, 50-point S&P bar, and when that bar held, I exited at 10:30 for a loss at 596. 596.38. So $5.38 loss. Now, if I was trading much higher size, I would have been totally wiped out by this or taking a massive hit, but because it was one share, just had to take the L, and that's what happened. Now, after that, SPY was starting to compress, and I took a day trade long, one share, at 598, and I took this at the 1045 candle. So right over here, I took this on the notion that, and this 50 SMA has climbed higher because this drawn line moves as the 50 SMA moves and re-anchors every day. But when I took it on the break, the SMA was actually over here, and it had cleared that SMA. So I liked what I saw. I thought this had a nice chance of continuing here. Now this held, test, a couple of times. Didn't really do too much, and then we had a 1OP bearish cross coming in. So I scratched this trade about 25 minutes later at 598.22. So right over here, scratched it, 20-cent win, because didn't quite escape the SMA like I wanted it to, had a bit of a long test, didn't know if we were going to get any follow through. So market grinded the rest of the day, and we did eventually get follow through later in the week, so this would have worked out much better as a swing trade, but we had some low odds trading later in the week, as you'll see. So took a big loss, took a scratch / a tiny win. I thought both of them were pretty decent trades. The first one, just terrible luck and timing with that Trump announcement. That's going to happen. Second, I had a nice time stop. I had an expectation for what I wanted to see, but that this 1040 bar, it had some retracement. This is a bad print on this 1045 candle. Not sure what happened here. It did not look like that earlier in the day, but bad print there. But we didn't get a follow through that we wanted to see. I thought this move looked a lot stronger initially, and then it really fizzled out. Now, because it was a strong move, I knew I had a chance to scratch out of the trade if it didn't produce, and that's what happened. So, had a time stop, got time stop out of the trade, and moved on to the next one for the day, which was a SPY overnight swing short, which I took late in the day right here at 597.60. So right here at the close, took that, and then I was looking for a gap down and a higher low, potentially challenging this low somewhere here. Now, I'm not sure if it would get to 590 perhaps, but I thought we had a decent chance to maybe challenge the opening candle price 592, or even make a higher low 593, perhaps find some support at another AVWAP. So if I were to move back here, this has the prior AVWAP. So this is the VWAP from the prior day, maybe a test of that level, and or a breakthrough and then a snapback and poke above it, something like that. But we didn't get that move overnight. So when I saw this candle right here, took the loss, went above the 50 SMA, closed, had follow through, didn't get the gap down that I wanted to see. So took the loss on SPY on that one. So the SPY trades not off to a great start for the week, but they're all kind of one share. So on a material note, they don't really matter. And it's just extra practice for me. So we're finally getting into some stock trades here. Now, first trade I took was 2-4, or not 2-4, that's the date, and it's not the trade. It was ELF on 2-4. So let's take a look at this D1 first. So here's ELF on that day. Very weak stock. Did have earnings coming up, but it made a massive move lower on heavy volume. So this is a nice pick, D1 wise. Let's take a look at what happened M5 wise. Okay, so on ELF, I took this at the 1034 candle. So I took it right here at 87.75. So SPY had a weak move to the high of the day over here. And this stock was breaking down. So I liked this breakout and closed to new low of the day. It was a bit of a choppy stock, but I liked how it had cleared this level kind of around, $88. So my plan was SPY needed to stall, and I didn't want to see a new high of the day. I expected maybe a dull day of inside trading here, and I want to see these stacked long candles kind of get erased. Now ELF bounced a VWAP, which is fine, and then it retested the low of the day, but formed a higher low right over here. So this is looking good. I missed my chance to add right here. So in short here, I would have added right here because this move was pretty weak and choppy, and then maybe take some gains on a low of the day break. We didn't get that. Then we get another pop over here, and we're starting to compress. And at this point, I'm like, yeah, you know what? ELF still looks pretty good at 1145. Market over here, 1130, 1140. Has moved up higher. Now, this move isn't super high quality, but I was like, I'm not sure if ELF has that much downside. Maybe it'll get through, but I am going to try to scratch out of the trade. So I put my order out for 87.75, but I fat fingered it and put it for 88.75 and ended up taking the loss. And it sucked because had a breakdown of the low of the day, which I would have added, and then and then probably taking gains on that bullish engulf off the low of the day here, which is a pretty nice move considering that the market was bullish and was kind of on the wrong side of the market, but I could still profit on that trade. So that's ideally how I would have liked to trade it, and that would have been at 86.75. So would have had a nice dollar with an added position on. Unfortunately, I did not get that. So a couple things with this ELF short. First part was that this is a choppy stock with long candles, so you want to get in when these long candles start to fail rather than chasing the long candle. Now, the setup I was going for was that we had a bounce of the support, second bounce of the support, and then a breakthrough. So I like this lower high right here, but this kind of happened too fast. This lower high setup tends to happen over time. You can see that here's the break, and then we finally poke down at this, whatever this level is over here, poke, and then we finally breach it through with a long red candle here on very heavy volume, and that's our signal to get into the trade. Now, I knew that this setup could happen later in the day when I took the trade, and what I was watching for is, okay, we get a bounce, then we kind of start to trickle down lower in the day, which is what I was thinking. I didn't predict that we get another bounce, and then we get lower, and another bounce, but as long as these were lower highs, I was good to stay in the trade. So I knew that, but just kind of fat-fingered my exit, to be honest, and that happens. So not stressing about it too much. I think I had a good pick. My entry was okay. It could have been a little bit better. Could have been 30 cents better. And when you're trading a stock like that's 80, $90, 30 cents makes a difference. So could have been 30 cents better. Preferably add on a bounce that stalls closer to the high of the day here. There's a marginal new high. And then add on the breakdown and then take profits on a bullish engulf over here. Because you know that once it starts to break through that low of the day, that's when it's going to start to snap back. All right. Second one here, I took SPY. I took a day trade short at 605.51. So I took it right here. Now this one I was kind of following Steve kind of following Pete on, where he was looking for some weakness. We have a meager rally. We have a breakdown through this high, and we're testing this low. So took it right here with my stop being at the high of the day. It's a pretty nice entry. We got immediate follow through, which was nice, and then we poked back above it, and I had my stop at 601.45. So I figured that if this snaps back hard, I don't want to be kind of caught stuck in this move. So I'd rather just scratch out and reevaluate if that happens. I wanted to see some steady, immediate selling to VWAP and take gains over there, which would be a nice $1.50. Now we got another little poke. And then we got the drop later. So this was the move I was looking for, but I wanted it to happen maybe 4 candles earlier. Instead it happened a lot later than I expected, which told us that buyers were strong. And then this is when you have to start to covering over here on the stock. You'd really want to take gains into strength on a day like this when it's bullish. So taking gains at VWAP is a nice little play that you can make. So 10 cents, kind of scratched out, tiny win. Was okay with that. It didn't do exactly, it did what I wanted it to do, but not in the time frame that I wanted it to do, which meant that this move was a little bit less predictable. You can see that this red candle comes out of nowhere, and that's kind of your early chance to take gains. And if you short into this, you get a worse price, and you might get some follow through, but it's not a ton of follow through. You got to manage it pretty quickly. I think Pete took like 10 points off this, and then he was out of the trade. So it's really hard to manage. By the time you get signal into the move, it's already over. So you're kind of better out waiting for this move to fizzle out and then starting to look for longs. When VWAP is holding, you get this 1-up bullish crossover here, and then you can take some longs for potentially the rest of the day, and you get another decent move to test the high of the day, and that's when you can take your remaining gains. And that lined up pretty well with what ELF is doing, right? As soon as I said, all right, VWAP is starting to confirm over here. Now, ELF actually put this bullish engulf before over here. So if you put that market context, market is bullish, ELF is a bit choppy, you want to take gains on the first sign of strength and not kind of wait out too long. Otherwise, I'm ending up scratching this trade over here later in the day. Next trade on 0.25. So we got a gap down, a little bit of a bid check. This candle is ISM Services, I believe. Negative reaction, engulf it, not doing a whole much, and then we get some nice green candles later in the day. This is a decent move. Some medium-sized candles. There's some overlap here, so it tells us that there's still some sellers lurking. But this bullish cycle produces, and then we're waiting out this bearish cycle, and this bearish cycle holds the high of the day, and I think the previous day's high. And I have to check if it actually fills in the gap or not. Here. No, yeah, we're through the gap fill. So through the gap fill over here, and we've confirmed above it. So this is a really nice setup for longs for SPY. Okay, so first trade I took a couple trades this day. I took two. We'll start with the less standard one, FMC. So this is the massive gap down, and this is typically a stock you don't trade. There is one setup that I trade on stocks like this that's not super textbook. I call it a gap fill reversal setup. And what I'm looking for are stocks that have made a massive move lower on really, really heavy volume. I mean, the R volume for this day, it's got to be over 3. Your volatility, over 200%. So if you look at on my scanner here, SMTC, this is a move that I'm looking for, that a gap fill reversal. Massive R volume, big gap down, and then I want to see just steady buying throughout the day as this stock moves higher. So here is the move on FM or FMC, and you're at an entry maybe on a higher low over here, bounce off VWAP at 1125, and it grinds up higher. But I like to make sure it breaks that high of the day. That's a pretty big clue. If it can break the high of the day, there's a good chance it can go a little bit higher. So I enter FMC at 120. So here's the 120 candle, and I enter it because we're ready to close that bearish cycle. We've had a lot of tails under body. We've held the halfway point of this long green candle for a long time. So that's pretty bullish. Now FMC has a breakout to a high of the day, and then immediately checks that, which I don't like, but then it engulfs it back pretty quickly, so we're on track. So I'm like, all right, this is looking pretty good. I'm day trade long 100 shares here. So you've noticed a lot of my prior day trades were 1 share. I actually had a lot of conviction because I know this setup is a pretty decent setup. So watching it, and then this market move up higher, moves up higher, test, moves up higher, test. Okay, it's not really a super strong move here. It kind of fizzles a little bit after like from 130 to 230 here. You can see it doesn't really go up. And FMC in that entire time flatlines, doesn't move up at all. So I leaned on this a little bit too much, and then I ended up taking the loss when it broke through this candle, because this candle was my stop. And yeah, on this retest here, I took gains at maybe 36.19 was when I took the loss on the stock, and I entered at 36.67. So I had a tiny gain for a good chunk of this, but just didn't end up materializing, and I had to take a small loss. So happens, but I think everything about this trade was good except the trade management. I should have scratched out of the trade when it didn't produce at an hour. These typically will have some movement in 45 minutes or an hour. If it stalls for an hour, there's some selling pressure here, I should get out of the trade. So the mistake here on FMC was the time stop. Now, a trade I did take that was more textbook and I posted was Abbott. Here was the D1 on Abbott. Scroll back in time. Nice leg higher. Compress, compress, compress. And then broke it out to the upside and had some nice volume. Okay, so here is the M5 chart for Abbott. Now, you want to get it early on this breakout, so somewhere like 10 o'clock would be the ideal entry in my opinion. but didn't have the market confidence to really take that kind of trade. Had a nice move up higher, test, poke up, and then it pulled back later over here. Now it pulled back, but market's holding its own, and Abbott is starting to gain relative strength. And then I start to see these stacked green candles right here. So I take Abbott. It was originally supposed to be an overnight swing long, 25 shares at 131.71. So I take it right here, pretty much right before this buy signal. And I like this steady green action, these organized green candles right here, while the market was flat. So that tells you that this has some relative strength. That was the clue for me to get into the trade. So I take it right here, and I'm looking for a SPY to continue up, and I'm looking for this stock to break through the high of the day and also continue up. So Abbott continues, breaks, and closes above the high of the day right here at 135. And then this is the candle at 135. I wanted to see this stock make a new, or SPY make a new high of the day as well. And when I got some follow through, I added at 132 on the 140, open of the 140 candle. So my average price was 131.91. Broke through, came back. You see how it retested this prior high? So retested this prior high. And honestly, I probably should have added here again, but at 215, market's kind of not really moving super strongly. Didn't really make a convincing new high. And I wanted to see this long green candle hold and start to advance up. We didn't get that, so that's why I didn't add to this trade over here. Stock looked good, but I didn't have a lot of confidence in the market, so I figured I'd rather ride this guy out. And if it's a double top, I can scratch out or take a small loss if I need to. Now, at 240, we get this move up here. This is a pretty climaxy move, in my opinion. Stock has made a pretty nice move, and when it gets extended from the 8 EMA, it tends to come back to it, right? See, every time when the trend is strong with the long candles, doesn't get it can maintain its extension. When the moves are kind of medium-sized, tiny body candles, breaks up, pulls back, right? Breaks up, pulls back over here. So I knew that this is probably going to reverse, so this is not a bad time to lock in some profits. But I was still a little bullish at 240. We still held the open of this candle, and I thought we have a chance to make a move higher. So stock pulls back over here, test, and we got a couple of tails underbody, testing this prior breakout, which is fine. That's where I expected to find some support. And the market starts to rally. Over here, 315, 320 makes a new high of the day, and this stock does not. So here is the stock at 320. Here's the market at 320, and I decided to take in gains at 132.32 for a pretty decent profit. So 40 cents on an added position. And I added 25 shares to that. So that was a nice little win on Abbott, and it was a really timely exit. You can see we broke through here right away. So it's a smaller profit. And then over here, I would have pretty much had to scratch out of the trade once it got to a 345. But I didn't let it because I knew that the price action told me that this was losing its relative strength on this leg up higher, and this move was pretty weak, so it was prone to getting faded. I knew that every time we got a pop on SPY, you can see when it gets extended, pulls back. We get a pop, pulls back. So I knew that on any other pop, that was my chance to take in gains and hope that Abbott could push up a little higher. When it doesn't, I'll be able to lock in gains at a pretty nice price. So I missed the high of the day by 18 cents, which I will take. And that was a good trade. Simple as that. 2.6. Here's Feb 6th. So gap up. I'm immediately watching for if we get a nice gap fill reversal. We don't get it. See these choppy candles, very, very low volume. This means it's a wimpy move lower. I'm actually more inclined to get long after this move. Wait for this move to stall out and then get long into the day. So I took a few different longs here. First one was PLTR. So this had a beautiful break of compression. I really should look at the D1 chart first. Otherwise, I'm going to be zooming to this M5 chart. Only have to zoom in again. That is not a good look. So big gap up, test, test, test. Nice long green candle. That's through the prior high. So on this breakout, that's a nice time to enter on this trade. Now on the M5 candle, we got this breakout, and then we tested this breakout. We had this bearish engulfing candle over here. So we tested this breakout, and I went long PLTR, day trade long, 5 shares at 108.50. So right below the high of the day, and I was front running this a little bit over here. What I liked was we had a nice grind up higher on a day, I think it was this move here, when the market was kind of flat, kind of fizzling out, not really doing a whole lot, right? So the market's super flat over here. PLTR found some support, no fall through on this bearish engulf, and grinding up higher. Now, the first thing is that this didn't happen very quickly, but I'm okay with that because it compressed, it absorbed a lot of this pressure. We poked the halfway point, we started to eat away back up, and we closed above the open of this candle. So I like this move that I saw in the stock. I felt had a good chance to break through the high of the day. All right, so we get a sell-off. We get another kind of poke down lower, still looks good. Lower high, still looks good. And then we kind of flatten out. And stock isn't really doing too much. So I ended up taking the loss on the 125 candle. Right over here at 107.91. So about a 55-cent loss on the stock. So okay loss. And I just didn't get the fall through I wanted. I felt that with this higher low, or sorry, this lower high, I always mix those up. This lower high has a good chance of testing VWAP, and maybe I'll get a better price at VWAP rather than getting just posted up over here. Don't have a best entry. I didn't get the fall through that I wanted. So that is kind of what happened here. We get the poke down here, but this poke down, this high, or this low, sorry, was higher than this pivot low. So this pivot low served as a pretty strong point, and this 230 bar was on news. So it did react to the news, but was not as strong as what happened with SPY, and then broke through and made a new high of the day later in the day. So 310 was really the bar that I wanted to get in on. That was the entry on the stock, and this should have been an overnight swing. If I entered at 310 here, you're getting here at 108. And you can take gains all the way up here. It's starting to fizzle out 115, 116 maybe. That's $8 in this stock. That's a really, really nice mover. And you have a great entry point. So that was the entry on PLTR. The trade management was pretty good. I think the entry was not as optimal. I should have waited for the high of the day break or gotten in earlier off this pivot high, which is a bit of a riskier entry. I don't love this entry as much because we got this bearish engulf, and this move kind of went straight up pretty fast. It needed time to digest all these gains. You can see after this move at 10:55, it took pretty much the entire day for it to digest the gains, versus this move happened in 90 minutes. Then it spent, 4 hours digesting the gains, and then it can resume the move in the last hour of the day. So most of the time, the stock is not going to be in a situation where you can immediately enter it. It's going to be doing some contra cycles. So you're going to have time to enter these guys and set alerts and wait for the right opportunity for them to come up. So those are the mistakes in PLTR. Prove the entry and enter more convincingly when it did have a good entry and ride that out for an overnight swing. The concern was the unemployment report. So to factor that in, maybe you size it smaller. I think regardless, it was a good swing, even over the report. The report has a good chance of coming out strong, and given this move up to close the day, you had a decent chance to scratch out of the position later, unless it made like a terrible move overnight. You could also manage your risk with like a debit spread or a call. Okay, so that's enough on PLTR. Still looks good to me on a D1 basis, one you can buy dips on. Another one I took, SWKS, similar setup to FMC. This is a gap fill reversal play. This one ended up doing a little bit better. We still have to be careful on these. So let's get into this stock over here. Gap down, long green candle with a bit of a wick. Okay, not the most bullish, but decently bullish. I like when the first candle's green, making you high the day early. I like that. And we spend the entire day pulling back. And then finally, when this stock starts to gain some relative strength and closes above this pivot high from 11.55, I get long at 12.35. At 66.49, I take a day trade long 50 shares of this stock. Now, this stalls for a couple of bars, and I think I ended up taking a tiny loss at somewhere here, like 66.30-ish. So I take maybe like a 17-cent loss, 66.32. Figured I'd scratch this trade here because from 12.35 onwards, take it at 12.35, right? Market moves up higher at 1. Stock is flat. I don't like that. And I gave it a time stop of about 30 minutes. Did nothing happen. As soon as I exited the position, stock popped up. And the best thing I did with this trade was immediately re-enter this stock at 68.78 with the target of the high of the day. So we hit the high of the day, and you can see we hit it. We get this wick over here. I don't hesitate. As soon as I see that wick, I take gains at 67.09. So I made my money back on this pause, and that's kind of what I was most proud about in this trade. My entry was good. The pick and the setup was good. I got the market right, and the market was pretty garbage, to be honest. I need to give it one more candle at a time here, and it would have popped up, and I would have taken some pretty decent gains here, maybe a 70-cent gain on this, which is a decent move for a stock like that. So that was SWKX overall, holding it a candle longer. But I liked my exit, and I liked my re-entry on this position. And that probably could have been an ad, honestly, if I had stuck with it. Now, I also took a SPY trade on 2.6. I took a day trade short, 5 shares at 603.75. So I went short right here. Now, we had this big breakdown, not any big news. And what I was really looking for was some sort of, okay, we get a test lower, another test higher, lower high, and then we have a nice move on volume. I thought it was suspicious that this happened before the earnings. Not the earnings announcements, the unemployment report. However, I figured that there's a chance that we might see some follow through, maybe test 600, maybe test one of these lower VWAPs or VWAPs from the prior day. Now, on the big candle like this, and on a choppy day, stock is probably going to bounce. This was a overreaction candle, probably triggered a whole ton of sell stops that were set up, here, 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 here. You're probably going to trigger some sell stops, and pros are probably going to take gains on a long candle like this. So now I take a small position here, and I'm willing to hold it through the open of this candle and potentially add if this open holds and this stock starts to roll over. So I like what I'm seeing here, but I enter here because we could have an immediate move lower on a couple of bars, and this might be a really nice entry to get in. So I like my entry at the halfway point of this candle. Now the stock moves up here, and we get this rollover pattern here, and this is the most important bar, I think, right here, where we move back up higher, and we get above this bar, and we don't make a higher low, and we don't go down immediately. If this trend was strong, we would have seen red candle, red candle, red candle, or red candle, pause, and we would have actually been able to test this low of the day. Fact that we got above this, test this close, I'm on high alert, and then right here, I take the loss at 604.73 because it closed above my stop. I don't know what's going to do. This is a V reversal, and the market ends up making a new high of the day. This was a launching pad, squeezed out these overextended shorts that piled in here, aka me, and I managed to fuel it up late in the day. Okay, 2.7. We're going to start with a SPY trade I took. And I took SPY where was my short here? Day trade. I took a day traded short, 1 share at 603.99. So I took it pretty much right here. We had this long red candle, We had a retracement that did not capture half of this. Then we had a nice another red candle to a new low of the day. It had some tails, it had some overlap. So what I probably should have done over here is to wait for another little bounce, because this is a very quick move lower, and it's probably going to stall out a little bit. But what I was leading on was the fact that we were near the all-time high, and we got the news that really poked down below it hard. So I was leading on that all-time high level, and I was early in the day, so I had time to write out the trade. So pull back over here. The better entry was actually probably somewhere here, to be honest, around 605. The halfway point of this candle is a good entry point as well. So not chasing at the low of the day. That's $1 better entry already. Get a couple of tails, and we get this nice long red candle over here. So when I see this, I'm like, hey, this is actually looking pretty good. I might stick with the trade here. We dropped really hard, really fast, and that ended up being the theme for this day, because we got this Christmas tree pattern overlapping garbage, and you had another chance to exit out over here, 602, or some stops at 601. But yeah, dropped pretty hard and fast. Maybe there's another leg lower. It's really hard to tell over here. This is some low volume garbage. Just hoping for one little extra pop, but the odds are so 50-50 now. So I honestly should have exited somewhere over here at 602. And there we go. Here is our test low of the day. One more test. Nice long green candle. I would have gotten out of the trade. So the best way it looks like in hindsight to play this was get in 605, right? Or get in a little pop. 605 is pretty good. And then take gains. This over here, move has no follow through. We're getting all these wicks. Take gains 602, 601.50, right? It's a nice place to take some gains. Looks like it even tested around 600. Pop back up, reload. Okay, garbage. Testing VWAP over here. And then this is a nice signal bar here. It's a little bit longer than I would have wanted to. I could have entered somewhere over here, but nice little signal bar. You could have shorted that on the notion that, okay, well, we might test low of the day again, but this could also be a higher low. We could even eventually move back up hard over here. So you have to be pretty careful with your stop. So we're getting moving down lower. Okay, this is a nice move. And start to stall a little bit. I would probably take gains over here if I were to short again at the low of the day. I don't think we're going to get through. Volume is not low enough. And see how these candles are mixed and overlapping, and they retrace back in the body. There's some buyers here. This is just not a strong enough move to actually crack down below that. So I just laid out exactly how I should have traded SPY on this day, but very choppy, chunky kind of day. Not the strong price action that we wanted to see, and not the move I was expecting when we got this initial strong sell-off near the all-time high. So with that SPY trade out of the way, I'm going to go over 3 other trades I took today. First one was Oklo. I took that on the 7th, which was Friday. So Oklo, I did something a little bit more experimental. I did a day trade long, one share at 57.67, and I was literally trading the opening pattern of 3 stacked green candles, little overlap on heavy volume. So I meant to enter at 56. Turns out my parallels was in travel mode and was not able to refresh the data and calculate it very quickly, which meant I could not get accurate fills. So I meant to enter at over here 56.50, missed it, so I had to settle for that, and I lost $1 on that in terms of profit and potential. Oklo pullback, grinded the entire day, and I eventually took the loss on Oklo on the close. Right over here. Let me wait for it to fizzle out. Yeah, so took the loss on the close over here, right at the 55.50 level. So ended up being a $1 loss. I really like this pick. Earnings was a little bit too soon. I felt that with the strong move, it had a chance to rebound higher for the rest of the day. Never quite happened. Now, if I had a nice entry point where I wanted to enter, I had a good chance to scratch out of this trade. or even take a tiny loss in this trade near VWAP. So that was Oklo. You see here, market was just bearish the entire day, and it held up pretty well, all things considered, but just didn't have the market on my side, and that ended up costing me for this trade. Next trade I took was HIMS. And I took this trade at, I took it at 45.56, and I actually added immediately at 45.96. So I took a day trade long here, day trade long here. So 2 shares, somewhere 45.70 something. Pulled back hard immediately, ended up compressing, and then when it broke through that low of the day later in the day at 3:30, this is when I took my loss at 42. What was 42.63? And this was just a tail of a stock that looked great early on. Market was bearish, sold, held this bid, but see, I was below VWAP the whole time and couldn't recover VWAP. That's their warning sign, and it's going to go lower. Now, overnight, definitely had a chance to take a much better loss on this stock, somewhere over at 43.73. But it was a day trade, wasn't holding it overnight, so took the L. Now, again, size that pretty small. Also, not my usual setup, to be honest, on a stock like HIMS. Not my usual day trading setup. I don't love this mixed Christmas tree candles that tell me that there's sellers over here. We got a nice little pop, instantly smacked down hard. So I'd be out of that position pretty quickly, especially on this bearish engulf. That is a warning sign on 10:30. And it did not happen with the market. That happened separately while this market was a green candle here, holding the low of the day. The stock put a bearish engulf. So that's a pretty big warning sign on HIMS. So yeah, the improvement I would make on this stock is not take the trade. It was good, but it wasn't the setup that I like to trade. That's the most important thing. And the market was pretty bearish here. There was a chance that we could recover it higher. If we could get above this high, never quite happened. So got the market wrong and not the pick that I wanted. That's one to avoid in the future. Now, last one I took that I really liked was Take Two. Earnings, big compression break on massive volume, gap and go. Really like the stock. So here's the pattern that I liked a lot. Gap up, long green candles, spent most of the day digesting these gains. So this move happened in the first 20 minutes, and then from 9:55 all the way to 12:50 for about 3 hours, it was just digesting the gains, higher low, higher low, higher low, higher low, test, 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 holding all these gains while the market was moving lower. Love this on the stock. Now it broke through here, the high of the day, at 12:55. So here is the market at 12:55. I liked it. It was basing out, forming some support. So I liked taking 2 long here, or T2, I should say. Now we got a check of this, which I didn't like, new high, another check, which I didn't like, and I think I took gains somewhere around here at 211.20. And it was because that the market was starting to roll over. 130, yeah, 130, and this is the 140 candle right here. It's the 140 candle, so I thought, all right, well, starting to roll over here. Still not looking bad, but, I don't know how I feel about this market setup right now. Couldn't get through VWAP. Nice long red candle. We could probably take a test low of the day. We might crack it. I don't quite know yet, and this could easily fall below my entry and kind of close below that. So I didn't quite see the move I wanted in the time I wanted, so I took the gains on Take Two at 211.28. And actually, that's my mistake. I took it on the 215 candle, not that candle, and I missed my exit by one candle because I knew that in this bullish channel, this big pop here, right, doesn't get too distance, doesn't get extend too far from the 8 EMA, so it's probably going to retrace it back. And I was waiting for that pop, and I felt that at 215, I guess I decided that enough was enough. I should get out of the trade. So my exit did not make sense. The stock was holding up really well relative to the market. It had just made a new high. But I think I was a little too bearish on the market. So I guess I just had to give this trade a little bit more time to work. But I like my pick and I like my entry. I like when I entered it relative to the market on this kind of day. Now, this day is bearish, but it's a weak bearish trend day. So if you can find a really nice long and enter it on a good cycle, you have a chance to make nice gains. So in the future, what I would have done is probably held this a little bit longer, especially because I didn't take the exit on the 140 candle, which would have made sense. I waited this entire cycle out, so it's pretty much ready to go at the low of the day, which I didn't know what was going to happen. But I really just I think I was unwilling to take the loss over here. That's kind of what happened, I would say. And because of that, I missed out the chance to take profits at a pretty nice win, 212.64, which would have been almost more than a $2 win on the stock, holding it in. So those are my day trades. I had a couple of decent ones. I think Abbott and Take Two were my best picks this week, and there was a couple of other ones that were questionable at best. There's a couple of ones I was experimenting, but for the most part, a lot of just one share, getting my confidence back, trying to get my entries back, and developing my patience and my eye for day trading, which was just rusty. So I've been just trading myself back to shake off all the rust. I'm going to end this video with 2 swings I took overnight, and I am still in. So the first one is Tesla. I took a debit spread, the 360. It broke through over here. Let's zoom into this M5 chart. A lot of clear path down to that 100-day moving average. So broke through horizontal support right over here and held that level. So I took the 362.50, 375.50 PDS, the 214 PDS for a $2.30 debit. And we got a nice follow through today, but my expectation was, okay, well, we had a pretty bearish close, not really able to bounce. So expecting maybe a gap down on Monday. We got a gap up today, and Tesla gapped down, tested the gap, and then continued on downwards. So really love the action in this stock, and it tells me that I'm on the right side here. Now, this market, if I'm looking at what happened, it did preserve about half the move. Right, we're right at the halfway point of this, so I would need to see it. I would need to see it get smacked down here, or at least retest this level for me to keep staying in Tesla. There's a lot of sector rotation, and if it tests the high of the day here, that's actually a little more bullish than I would prefer, and I'm gonna have to keep a close watch on that. But I still like Tesla. I think it has a chance to continue on downwards, and on a gap down and a couple of red candles, probably gonna be taking some gains on that stock. The other trade I took short overnight was Wendy. Here's the D1 on Wendy. Now, as earnings after I believe before the open on 213. So very bearish chart. D1 popped up over here through this low minus trend line and through this long green candle low. So I took it at 1441. Today, market gapped up higher and had a bit of a doji. Wendy on the M5 chart. And I'll just show you where I entered pretty much at the end of the day here. Not the best entry. I think it would have made more sense for me to enter at least somewhere here, 1453. This is a choppy stock. So long green candle down, had a bounce, test, bounce, test, bounce. Now this was a bit of a taller bounce than I would have liked. So there might be some support here. But if we can crack down that support level very early in the morning, some nice long red candles, maybe a gap down, I'll feel pretty good about Wendy. But for right now, I still like it in the day, just kind of choppy. So it tests it, bounces up, tests this, bounces it up. I'm just waiting for this support over here to start to crack down. And I'm hoping I might get that tomorrow. I'm keeping a short leash on this because I have earnings coming up. So I don't have a lot of time to get out of the trade if I'm wrong. And I have a small profit right now. So if it can't correct through the low of the day tomorrow, starts to flounder around, I am going to take my gains and get on the sidelines. And I'm short, I think, 250 shares. So this is a smaller size. It's like a little bit less than half a size for me. If it was a normal size position, I'd probably short like 600 shares maybe. But because of the market and the upcoming earnings, I'm keeping a smaller size on that. So those are all the picks I took this week and some of the picks that I'm holding overnight. Overall, been up and down in the win rate, but the size is small and I'm just getting back my confidence. I'm trading a little bit more size, slowly leaking in. I'm slowly getting confidence in my entries, my setups, my picks, and I'm posting my trades to the chat, which keeps me more accountable. So, still feeling good about February, and once I get my confidence back, I probably erase all of my losses in the last month with maybe 2 wins. So, right now the theme of my account is keeping it defensive, right? I'm playing more defense than offense, really picking for my times to strike, and when I do, I strike hard. I'm in and out. This is kind of guerrilla warfare, hand-to-hand combat. This is some crazy F1 track. It's kind of like driving up a mountain where there's all these like twists and turns as you go up the mountain. You hit a straightaway, twists and turns, versus what we saw earlier in the year where it's like dip, go long, dip, go long. There's a lot more. It's a lot easier to kind of fall through that. And it all comes back down to this big, heavy selling candle over here on the 18th. The whole context of the market has changed. Since then, it's just been floundering around for the past 2 months. 2 tic-tac-toe boards, I would say. So keep it defensive. Pick your spots. And you only need a few great trades to do well this month. And if you're unsure, if you're unconfident, just keep it 1 share. Protect your account. If you're an intermediate trader and you're working on, building your account. Even if you don't take any trades and you strike hard on the runways, you're going to do really well this year. It's just going to take a lot more patience and waiting out these periods where you have to lie low and just not take a whole bunch. So see this as an opportunity to work on your patience, and see this as an opportunity, as a test where can you make money in these really hard conditions. I think that's a big big part of going full time. You're not going to have great conditions, and you need to be able to strike really hard in the great conditions so you're not stressed out about these conditions. And you also want to have the ability to trade these conditions, especially day trading or taking overnight shorts or taking non-directionals, strangles, straddles, earnings time spreads. Whatever you may be, every pro trader trades it a little bit differently, but they're all able to make money. So you need to find what works for you. And if you don't know what works for you, study those entries, those exits, those picks, and understand what they're doing. Thanks for watching, everyone, and I will see you all in the next video.